Well, moving to the property sector, Emira Property Fund on Monday advised that CEO James Templeton has resigned. That'll be with effect from August this year. James Templeton joins us now. Good evening to you, James. So where are you going?
Hello, David. Thanks for having me. I'm going to have a bit of fun, David. I've been at Emira for 11 years now. It's a demanding business. It's a very competitive business. And quite frankly, I'm going to go and have some fun.
So it implies you haven't been having fun up to now.
No, look, I think it's fun, but it's challenging. You know, there's no doubt the property industry is very competitive. Not only do you have big competitors in South Africa, you have a tough market. The economic growth, as you know, is relatively slow. So it's challenging, it's tough, and I want to go and do some personal property stuff and see if I can crack it on my own. Well,
let's get Joseph in a moment, but unless you want to come in right now, Joseph. I was going to ask, tough. How has it affected you? Where is Emira as you are leaving it?
Yeah, look, the business is in fantastic shape at the moment. The environment is very competitive. If you go back to 2011, 2012, we had a tough period. The delayed impact of higher vacancies as a result of the global crisis meant that vacancies were high, and we actually went backwards with respect to distribution growth. Subsequent to that, we will be growing distributions by 9% this year, and next year probably a similar number, maybe a little bit better for various reasons. So the business is in great shape. I've got a great board, I've got a very strong team, and vacancies 3 or 4 years ago were double digits. They're now probably in the region of 4%. So very strong, but the pressure is coming from rental growth. Costs, as we heard earlier, electricity costs, municipal rate costs growing at double digits, but your revenue, which is rental growth and vacancies, is really not there because rental growth is not there. So certain stats look very strong, but your top line is where the real risk lies.
Joseph?
Where do you think the property market is right now in South Africa?
I think, as I said, look, if you look at the pricing on the stock exchange, so you obviously got the fundamentals and then you got the pricing on the exchange. Right now, certainly at the end of March quarter, obviously things have changed in the last sort of couple of weeks, but at the end of the March quarter, the sector was the most expensive it's been if you look at it relative to bonds. So the pricing was very expensive, but what you're getting is double-digit growth, and some of the funds are showing you 15 to 20% DPS growth. Now, we heard earlier on that the 186 long bond is sitting at about 820. The sector's sitting at probably about 7 to 7.5% yield. Emira is at about an 8.5% forward yield. So Emira is at a higher yield than the bond, but we're going to grow by close to 10% in the next 12 months.
Couple of big hits to the share prices in the last week.
Yeah, there was one of our BE shareholders did a book build last week. So there was a line of about 450 million rands worth of stock that came on, so that soaked up a level of demand. And then today, I don't necessarily think it's to do with my announcement. I don't think one person in an asset-based entity can change the share price. But on the back of the numbers that you were talking about earlier, share price declines, weakening bond yields, you saw the sector and Emira coming down.
Yeah. I think last week we saw, obviously, if you look at Redefine, they've actually taken quite a little bit of a hammering over the last 2 weeks or so. Now, the question really, in terms of where do you see the growth? Do you see, as you said, possibly the rental sector is tough. What's your mix in terms of office rental versus industrial?
Yeah, I think Emira's offices sits at about 45% of the portfolio. Retail sits at 40% and industrial 15%. So we're seeing good growth in the retail market and the industrial sector, the retail being the best at the moment. So retail number 1, industrial number 2, and offices number 3 in our business. Nationally, industrial is number 1, but we've got some good growth coming out of our retail sector. The sector growth has been coming from a number of things: refinancing of debt, issuing of cheap equity, acquisitions. A number of funds are looking at yields of 5, 6, 7% in first world countries, and yet they're issuing equity at cheaper than that. So a lot of it is growth and acquisition driven growth. But we've been doing it fundamentals, higher occupancies, and cost control.
Sounds like you feel you're going out at a good time. At the top, that's James Templeton, CEO of Emira Property Fund.